In today's video, we're diving deep into the current state of AMC, including the net flow trends, the shifting economic landscape, and the bubble people are talking about. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But everyone remember, this is not a financial advice video. Let's start with an update on AMC's net flow. This has been catching a lot of attention recently, with people predicting an intense period of volatility ahead. According to some recent data and tweets, there's a noticeable rise in AMC's net flow. Looking at the chart, it's clear that some serious activity is happening in AMC's price movement. This could be a precursor to something big, especially as people are expecting a significant price hike potentially by mid-November. We're seeing more than just a rise in net flow, though. The entire trading environment surrounding AMC is full of notable indicators suggesting a potential price surge. So why is this net flow trend important? Net flow data provides insights into how investors are positioning themselves and reflects overall market sentiment. For AMC, the uptick in net flow suggests that many investors are optimistic, believing the stock could outperform in the near future. We're also seeing this increase in net flow coupled with large long-term call options placed on AMC, some extending as far as March 2025. The sentiment here is clear. There's strong confidence in AMC's future growth, with many people betting on a significant price rally. This increase in long-term call options is just one of many signs showing that AMC is headed for a potentially pivotal period. What makes this scenario particularly interesting is the wide array of other factors also working in AMC's favor. For one, institutional interest is climbing. Large institutions are now increasing their AMC holdings, reflecting their confidence in the stock's potential growth. With more institutions joining the AMC investor pool, we're seeing a shift in market dynamics. This means the price can be supported and possibly pushed upward by this institutional buying pressure. Then there's the upcoming earnings report, which could play a massive role. A positive earnings report could provide yet another push for AMC, especially if it indicates improvements in their operational efficiency and growth. Improved earnings might put pressure on those holding short positions, forcing them to cover and in turn potentially driving AMC's price even higher. This increase in activity and interest surrounding AMC is all adding up to what many believe will be an exciting few months for the stock. Now, let's shift gears and discuss a different but highly relevant factor, what some are calling the biggest economic bubble in history. This bubble involves what is known as the Magnificent Seven, 7 large-cap tech stocks that currently make up about 32% of the S&P 500 index. This level of concentration in a handful of stocks is almost unprecedented, even more significant than the tech bubble of the late 1990s. While the S&P 500 has been reaching new highs, this upward movement is largely due to these 7 stocks. If these companies start to lose value, it could trigger a domino effect across the broader market, potentially leading to a severe downturn. Why does this affect AMC, though? Many of the institutions that hold these tech stocks also use their value as collateral to short stocks like AMC. When the values of these tech stocks are high, these institutions have more resources to continue shorting AMC. However, if these tech giants start to lose their value, the collateral these institutions depend on could shrink, forcing them to cover their short positions. And if they have to liquidate their assets to meet their obligations, it could mean more short covering for AMC, which would in turn push its price even higher. Essentially, a decline in these 7 stocks could trigger a chain reaction where institutions are forced to buy back shares of AMC to close their short positions. This potential cascade is a significant factor, and it's why people are closely watching both AMC and these tech stocks. This brings us to another important indicator, the reverse repo trend. Right now, the reverse repo is sitting around $202 billion, a drastic drop from its peak of over $2 trillion just a few years ago. The reverse repo market is where financial institutions lend cash to each other overnight, using treasury securities as collateral. This provides them with easy liquidity, which has been crucial in supporting the extensive shorting activity against AMC. With the reverse repo trend now heading downward, liquidity is drying up, making it harder for institutions to fund their short positions. Over the last month alone, the reverse repo amount has decreased from a range of $400 to $500 billion to just $202 billion. The declining reverse repo is a significant indicator of how much harder it's becoming for institutions to maintain their short positions against AMC, especially as access to quick liquidity is becoming scarcer. This is major news for AMC and its investors because it means the institutions that have been shorting the stock may face additional challenges if the reverse repo reaches zero. If that happens, these institutions will struggle even more with their financing needs, which could compel them to cover their shorts, potentially causing AMC's price to spike. It's all part of the complex chain reaction we're currently witnessing in the broader financial market, and AMC sits right in the middle of it. When liquidity dries up, institutions have fewer options to maintain their positions and may be forced into buybacks, which could be exactly what AMC needs to see a price surge. Looking at the broader economic landscape, there's also news that the U.S. national debt has surged by an additional $338 billion just this month alone, bringing the total to approximately $35.8 trillion. Although this isn't an immediate collapse trigger, it does create increased stress on the economy. Rising debt levels put pressure on various sectors, including the stock market. We're also seeing other factors contributing to this economic strain, such as rising unemployment claims, which are now at a new high, with nearly 2 million Americans currently unemployed. This figure has risen by nearly 60% since January 2023, and it signals underlying issues in the economy that could affect multiple industries. If the economy continues to weaken, there could be widespread repercussions impacting the stock market and driving more volatility across all sectors, including AMC. The interplay of these factors, from the national debt and reverse repo to the tech bubble and rising unemployment, creates an environment that could be favorable for AMC. The potential decline in tech stocks, coupled with shrinking liquidity and rising economic instability, could put even more pressure on institutions shorting AMC. As their financial position becomes more precarious, they might be forced to buy back their AMC shares, fueling a price rally. The economic strain is not just limited to the stock market, it's a broader issue affecting real estate, banking, and other sectors. As these industries face challenges, they may no longer be able to support large-scale shorting operations, which could benefit AMC in the long run. Turning our attention back to AMC and GME, there's also been a recent increase in call options on GME, indicating a similar sentiment shift for this stock. People are once again showing interest in GME, possibly in response to the positive momentum surrounding AMC. Some prominent investors have also been accumulating shares and calls, which signals their confidence in GME's future performance. This resurgence of interest in both AMC and GME reflects a broader trend of investors looking to challenge the short sellers. As more people invest in these stocks, they're putting additional pressure on short sellers, creating a situation where the shorts may eventually have to cover their positions. This battle between retail investors and institutions has been ongoing for years, with institutions using various strategies to suppress AMC and GME's prices. However, the growing demand for these stocks and the numerous economic factors working against short sellers suggest that the tide may finally be turning. While the fight is far from over, there's a growing belief among investors that a breakthrough could be on the horizon. The institutions holding these short positions are facing mounting financial strain, as evidenced by fines for misappropriating shares and other questionable practices. This pattern of financial misconduct highlights the lengths to which some institutions will go to maintain their short positions, but it also signals the immense pressure they're under. In summary, the combination of rising net flows for AMC, the potential collapse of tech stock valuations, decreasing reverse repo levels, and growing economic instability all point to an environment where AMC could see significant upward movement. As these factors converge, we're likely to witness increasing volatility in the markets, especially for AMC and similar stocks. This isn't a straightforward scenario, and there are many moving pieces, but for those invested in AMC, the coming months could bring exciting opportunities. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.